Every year, more than 65 million Americans rely on Medicare for their health coverage. And yet, according to a Kaiser Family Foundation survey, the majority of Medicare beneficiaries don't fully understand what their plan covers, what they're paying for, or what options they have. That gap costs people thousands of dollars every single year in late enrollment penalties, in the wrong plan choices, in out-of-pocket expenses that could have been avoided. If you are turning 65 soon, if you are already on Medicare and feeling confused, or if you are helping an aging parent navigate the system, this video was made specifically for you. By the end of the next 20 minutes, you will have a clear, complete, and actionable understanding of Medicare Parts A, B, C, and D, what each one covers, how much it costs, and exactly what you need to do next. Let's get into it. Before we dive into the four parts, let's establish exactly what Medicare is and whether you qualify. Medicare is a federal health insurance program administered by the United States government. It was signed into law in 1965, and today it protects over 65 million Americans. Unlike private insurance, Medicare is not tied to your employer. It is an earned benefit, meaning you or your spouse paid into it through payroll taxes during your working years. Number one, you are 65 or older and you or your spouse worked and paid Medicare taxes for at least 10 years. That is 40 quarters in the United States. Number two, you are under 65 but have a qualifying disability and have been receiving Social Security Disability Insurance, known as SSDI, for at least 24 months. Number three, you have end-stage renal disease, permanent kidney failure requiring dialysis or a transplant, regardless of your age. Number four, you have ALS, amyotrophic lateral sclerosis, also called Lou Gehrig's disease, in which case you qualify immediately upon receiving disability benefits. Important: if you haven't worked the required 40 quarters, you may still purchase Medicare, but you'll pay a premium for Part A. We'll cover that in just a moment. Your initial enrollment period, or IEP, is a 7-month window. It begins 3 months before the month you turn 65, includes your birth month, and extends 3 months after. Missing this window without a qualifying reason will trigger permanent late enrollment penalties. We will cover those in detail because they are one of the most costly and avoidable mistakes people make. Medicare Part A is what most people think of when they hear the word Medicare. It is your hospital insurance. Part A covers inpatient care, meaning care you receive when you are formally admitted to a hospital. It also covers care in a skilled nursing facility following a qualifying hospital stay, hospice care, and some home health services. This is critical. Part A does not cover outpatient care, doctor visits, prescription drugs, or long-term custodial care, such as a nursing home, where you need help with daily activities but are not receiving skilled medical treatment. That distinction trips up millions of Americans every year. Here is the cost structure for Part A in 2026. Most people, those who worked 40 or more quarters, pay $0 per month. This is what people mean when they say Medicare is free. It is not entirely free, but the Part A premium is waived if you've paid in long enough. If you work between 30 and 39 quarters, your 2026 premium is $278 per month. Fewer than 30 quarters, you pay the full premium of $505 per month. The deductible for each benefit period is $1,676 in 2026. A benefit period begins the day you're admitted to a hospital and ends after you've been out for 60 consecutive days. For hospital stays, days 1 through 60, you pay nothing beyond the deductible. Days 61 through 90, you pay $419 per day. Days 91 and beyond, called lifetime reserve days, you pay $838 per day with a lifetime maximum of 60 such days. For skilled nursing facilities, days 1 through 20 are fully covered. Days 21 through 100, you pay $209.50 per day. After day 100, Medicare pays nothing. A Medicare supplement plan, also called Medigap, can cover many of these out-of-pocket costs. We'll do a dedicated video on Medigap. For now, know that it exists and is worth considering. If Part A is your hospital insurance, think of Part B as your everyday medical insurance. It covers what happens outside the hospital walls. Part B covers doctor visits and specialist consultations, outpatient surgery, durable medical equipment, wheelchairs, walkers, oxygen equipment, mental health services, ambulance services in emergencies, and a broad list of preventive screenings, mammograms, colonoscopies, flu shots, cardiovascular and diabetes screenings, and more. Part B does not cover dental care, vision care, or hearing aids, three of the most common and expensive health needs for people over 65. It also does not cover prescription drugs taken at home or long-term custodial care. These gaps are significant, and they're exactly why additional coverage options exist. Unlike Part A, Part B always has a premium. In 2026, the standard monthly premium is $185. However, if your income exceeds certain thresholds, you will pay more. This is called the Income-Related Monthly Adjustment Amount, or IRMAA. If your individual income is above $103,000 or above $206,000 for married couples filing jointly, your Part B premium increases on a sliding scale, ranging from $259 up to $628.90 per month at the highest income tier. Part B also has an annual deductible of $257 in 2026. After that deductible, Medicare covers 80% of approved costs, and you are responsible for the remaining 20%, with no cap. If you have a $100,000 medical bill, your 20% share is $20,000. The 20% coinsurance with no out-of-pocket maximum is one of the biggest financial risks in Original Medicare. Always factor this into your planning and consider supplemental coverage. If you miss your enrollment window and don't have qualifying employer coverage, your Part B premium increases by 10% for every 12-month period you were eligible but didn't enroll. This is a permanent increase. You pay it for life. Medicare Part C, officially called Medicare Advantage, is where things get significantly more complex and where your decisions can have the largest financial impact on your retirement. Medicare Advantage is not a separate program. It is an alternative way to receive your Part A and Part B benefits delivered through a private insurance company that has been approved and contracted by the federal government. When you enroll in a Medicare Advantage plan, you step out of Original Medicare and hand the management of your benefits to a private insurer. The government pays that insurer a fixed monthly amount on your behalf. In return, the insurer must provide at least the same coverage as Parts A and B, and most plans add benefits on top. This is what makes Medicare Advantage attractive to many people. Most plans include prescription drug coverage, bundling Part D. Many include dental, vision, and hearing benefits, the three things Original Medicare doesn't cover. Some plans add wellness programs, gym memberships, meal delivery after hospitalization, and even transportation to medical appointments. Here is where I must be direct with you. This is where many people get into trouble. Medicare Advantage plans come with networks. Unlike Original Medicare, which is accepted by virtually any doctor or hospital in the United States that accepts Medicare, Advantage plans restrict you to a specific network of providers. If you see a doctor outside that network, you may pay significantly more or receive no coverage at all. Advantage plans also require prior authorization for certain procedures, meaning the insurance company must approve a service before it's provided. Studies have documented a significant and growing rate of prior authorization denials in Medicare Advantage. Medicare Advantage versus Original Medicare plus Medigap is one of the most consequential decisions you'll make. We'll do a full dedicated comparison video. Subscribe so you don't miss it. Many Medicare Advantage plans have a $0 monthly premium, which is understandably attractive. They do have co-payments and coinsurance, but they also have an out-of-pocket maximum. In 2026, the in-network cap is $9,350 per year. This is actually a protection that original Medicare alone does not provide. Medicare Part D is your prescription drug coverage, and as of 2026, thanks to the Inflation Reduction Act, the landscape of Part D has changed significantly in ways that benefit most Medicare beneficiaries. Part D plans are offered by private insurers. Each plan has a formulary, a list of covered drugs organized into tiers. Lower tiers are generic medications and cost less. Higher tiers are brand name or specialty drugs and cost significantly more. In 2026, the Part D deductible can be no higher than $590. After meeting your deductible, you pay a share of your drug costs until you reach the out-of-pocket maximum. Here is the major change that took effect in 2025 and continues in 2026. There is now a $2,000 annual out-of-pocket cap on Part D prescription drug costs. This is a landmark change. Before 2025, there was no cap. Beneficiaries taking expensive specialty medications could pay tens of thousands of dollars out of pocket in a single year. That era is over. If you or a family member takes high-cost medications, this cap is a genuine game changer. The $2,000 Part D out-of-pocket cap is one of the most significant Medicare improvements in decades. Make sure the people you love know about this. Like Part B, Part D has a late enrollment penalty. If you go 63 or more consecutive days without creditable prescription drug coverage after becoming eligible, you will pay a penalty of 1% of the national base beneficiary premium for each month without coverage. This penalty is also permanent. The Medicare Plan Finder tool at Medicare.gov allows you to enter your specific medications and compare plans based on your actual costs. I strongly recommend using this tool every year during open enrollment, October 15th through December 7th, because plan formularies and premiums change annually. Let's bring everything together. Medicare Part A is your hospital insurance. For most people, it has no monthly premium. It covers inpatient stays, skilled nursing facilities, hospice, and some home health care. Medicare Part B is your medical insurance. The standard premium is $185 per month in 2026. It covers doctor visits, outpatient care, preventive services, and durable medical equipment, but leaves you with a 20% coinsurance and no out-of-pocket cap. Medicare Part C, Medicare Advantage, is an alternative way to receive Parts A and B through a private insurer, often $0 premium, added benefits, but with network restrictions and prior authorization. Medicare Part D is your prescription drug coverage. In 2026, your annual out-of-pocket maximum is capped at $2,000, a landmark improvement for anyone on high-cost medications. Step 1. Confirm your eligibility and enrollment window. Go to Medicare.gov or call 1-800-MEDICARE. Know your initial enrollment period dates. Missing them is costly. Step 2. Use the Medicare Plan Finder tool to compare your specific options in your zip code. Plans vary significantly by location. Do not rely on what your neighbor chose. Step 3. Consider working with a licensed, independent Medicare insurance broker, someone who works with multiple companies and has a legal obligation to find the plan that's right for you. This service is typically free to you. In our next video, we are going to break down Medicare Advantage versus Original Medicare plus Medigap in plain English with real numbers so you can make that decision with complete confidence. If this video gave you clarity, subscribe to this channel. Every week we publish straightforward, honest Medicare education with no sales pitch and no conflict of interest. Leave a comment below with your biggest Medicare question. I read every single one, and your question may become our next video. Thank you for watching. The decisions you make about Medicare are among the most consequential financial decisions of your retirement. Take them seriously, and take the time to understand them. You've just taken that first step.